when you get in a heavy bull market, like we kind of are, all these funds appear promising all sorts of things. So like the covered call ETFs, the option premium ETFs like SPYT, and then there's been a company has set itself up, Defiance ETFs, where they do things like they leverage up on these type of financial derivatives and offer various things like MicroStrategy 2 times, like levered 2 times, MicroStrategy levered 3 times. So we're just going to have a quick look through. I'll give you my worthless opinion on whether they're any good or not, because people get very excited with that usual dividend or yield number. Again, just remember, and I say it every time and it's really boring, but if a $50 stock pays you $1 dividend, it's now a $49 stock and 85 cents to you, 15 cents to the government if you're lucky, and then the drag of their fee. So, and everyone just disregards all that. But anyway, let's have a look at these Defiance ETFs because they are interesting. It's a fascinating business for them to have kicked off. Whether they'll still be here in 10 years, who knows? But let's dive in and have a look through. So what Defiance has done is you can go in here and you can find stocks and it's then leveraged them. So this is Palantir, PLTZ, 2 times short. So that's pretty, it's a 2 times short PLTR, so Palantir ETF. I think people generally go on here, and most of the funds I hear are people wanting like the QQQY or the SPYT or some kind of income-based investment. And normally these underperform the underlying. So for example, the QQQY, I bet my bottom dollar underperforms the Qs. Yet people like the idea of receiving the income. So they're better off selling a share, but instead they just want to receive income and willing to give up the return so that they get that payment. For example, if we go in here and get the Qs, I'll remove the SPY. So that's the Qs. So that fund was QQQY. Now this is total return with everything reinvested. Yeah, it's underperforming. So yeah, if you want to receive more income, but overall less money, you would buy the Qs. So if you don't want to sell a share of Qs, you can receive more of it in income if you buy the QQQY. That is what is happening here. So for example, the Qs, they started this fund in 2023. If you just bought the Qs, you'd have 13,832. If you bought the QQQY, you would now have only 11,406. So you've got a drag of 2,400 since inception, and that does include all dividends. Don't be under any illusion that it does not. But here's the bit that people get excited about. If you just plug in the Qs on Market Chameleon, it's kind of a good site for getting just basic information. So the dividend on the Qs is about 0.5, and what people like on QQQY is that the option strategy they use generates a dividend yield of 65%. But all that's happening is that the stock price moves down by the amount they're paying you. Hence why overall you underperform. So yeah, it's kind of destined to go to zero at that yield rate, which is quite interesting. So I'm betting, I don't know how these will work out in the end. This is actually quite shocking because this is kind of destined to go to zero. So they must have a way of recalibrating the stock price because this is too much to pay out. Anyway, so that's the Qs. So Qs looks like that. Just visualize that stock price and now visualize QQQY. Yeah, what I thought. So even though you're getting that distribution, you are just, your value of your holding is just getting less and less and less and less and less. And at some point, I wonder how they will recalibrate this, because it needs to reset. Anyway, so you need to be, I know you see the 65% payment. I bet you if I search up in here in YouTube, QQQY, ultra high yield ETF keeps dropping, but it's making investors rich. It's not making anyone rich at all. That headline is completely misguided and incorrect. You're not rich. You can see exactly here what you're making, and you're making, well, since 2023, you've made 14%. If you just have the Qs, you'd have made 38%. There's no getting rich. Just be really careful. And then there's various others here. So QQQY versus QQCL. Everyone is misguided by the dividend yields. Remember, it comes out of the stock price. I go blue in the face describing this. Here you go. It's this same old guy, the average Joe investor. He's always talking about selling covered calls and all this nonsense. A solid income ETF, 63% monthly dividend. High dividend income ETFs you should avoid. At least at least she's talking the truth. 105% yield. Do you deserve a place in your portfolio? Well, of course it doesn't. So anyway, this is it's an interesting thing to look at. All these crazy ETFs. This one's thematic, so large cap X Magnificent 7 ETFs, quantum, connective technologies, leveraged plays. I wouldn't have got the MSTR here. Weirdly, the ones I saw a short time ago have gone. And the ones that they're showing here now, I wonder, just out of interest, Souks. How old is Souks? It's not even found. So maybe choose one that's been around longer. What do you think? MSTX maybe? MSTX. Okay, here we go. So that must be based on MSTR. So we add those two in. Let's have a look. So MSTX is in the red, MSTR is in the blue. So yeah, somehow short overperformance followed by underperformance. And I would imagine that will continue into perpetuity, that the MSTX will underperform overall. So what have we got? Yeah, here's the MSTR trading history. Here's the MSTX. It's only been around since sometime last year to now. I mean, you're not going to touch this with a barge pole. But they're all here. They all promise. I wonder what it says here. If we put in MSTX, it'll put in some insane yield, I expect. Yeah, 40% dividend yield. I mean, it's just nuts. It's a warning to everyone. You can look at these with interest. I don't even think you can short them because it's hard. Generally, stuff like this is hard to borrow. So you can't even make money from betting that they won't be here, that they'll go bust. Because that was my immediate thought, that all these crazy funds will disappear to zero. But it's hard to borrow, and you'll struggle to get the shares. That's it. These are all the crazy things. Basically, anything paying a high dividend, you really need alarm bells going off, and you need to go to this site, compare it against its underlying. It will be underperforming. Bet my bottom dollar, and then you know just to go find something else. As always, with me, if I was passive, it'd simply be the number of SPY shares I owned. And I don't know, maybe I'd be interested in some just individual stocks just for interest purposes. But really, the world struggles to beat the SPY, and there's a reason for it. It is literally the most perfect ETF there is out there. All right, that's it. Just be careful with these. They are not free money. That's it.